Hello and welcome to the 5th episode of Trust Tactics. My name's Caldwell. I am Deputy Editor of Money Observer magazine, and today I'm going to be explaining the importance of the independent board of directors that oversee an investment trust. An investment trust has an independent board of directors overseeing it and ensuring it is managed according to shareholders' interests. By contrast, open-ended fund managers only answer to the fund management firm that they work for. If the manager of an investment trust doesn't do a good job, it could be that they're persistently failing to perform well, then the board can fire and replace them. It is important to point out though that such sackings do not happen anywhere near as regularly as a football manager being given a vote of confidence 1 minute and then the boot the next. But the firepower boards have of being able to sack a fund manager will keep them on their toes. Over the past couple of years, there have been a few high-profile sackings, one of which was Alliance Trust, which effectively sacked itself as the board decided to drop the internal fund managers at Alliance Trust that were running the portfolio in favour of an external fund manager. The trust today is run by an external fund manager called Willis Towers Watson. Another example last year saw the board of the Schroeder UK Growth Trust sack Schroders and award the management of the trust to Baillie Gifford. It's worth noting though, incidentally, that trusts do not necessarily change their name when they change their manager, which does have the potential for confusion. As the board members of investment trusts are acting in the best interests of investors, they can and should be applying pressure to reduce charges for its shareholders. One of the more recent fee cuts has been the City of London Investment Trust, which earlier this year cut its charges by around 10%. It is already one of the cheapest investment trusts around. It has an ongoing charge figure of 0.41%, but the board negotiated a further fee reduction with the management group, Janus Henderson. Other boards have also become more proactive of late. Over the past couple of years, we've seen Baillie Gifford reduce fund charges on a number of its investment trusts, including the Scottish Mortgage Investment Trust and Monks. The fee cuts may not sound particularly significant, but they are welcome news for investors as charges nibble away at returns over the long term. This is made worse over the long term by the phenomenon of compounding.